let's get into the charts. Like Rob says in his weekend vid, we are living in exhaustion risk. This is the 195-minute chart. Very similar to the 4-hour, but when I put it on the 4-hour, I get confused as to the overlap, since the trading hour is not 8-hour trading day is not 8 hours, it's 6.5. So 195-minute divides each day into 2 candles. So these last 2 candles represent Friday, basically. One thing I wanted to point out, the market doesn't like gaps, and there's physical gaps in price, right? Like if we go back to this area on the chart, you can see there's a physical gap, right? And what happens, not right away, but eventually price comes back and tests. Now it was so strong it didn't come all the way back, but I tend to look at virtually every big, even big like engulfing candles as gaps, meaning looking here, if I to mark that out, there is a big gap down, even though we see it on the chart, it happened during the day. Price needs to come back and mitigate there, and you see that it did and resume the uptrend. So don't only think of gaps as being actual gaps up or gaps down at the open. Anytime you see a big engulfing candle, it doesn't have to be a 3, like this is a 2 candle. Just keep in mind that's really like a price gap, and price is going to have to go back and test and mitigate there again. But on the SPY, just one thing to be aware of regarding exhaustion risk. We do have some wicking here at the top. I always just note that to myself, and that's interesting because there could be short stops for shorts, and remember, a stop for a short is a buy stop. And there can also be orders sitting up here for people that are waiting for a breakout to the next level. So buy orders, and sometimes market makers come up into these areas oftentimes and just run stops and grab that liquidity. So until we're bearish, we need to be bullish, but just keep this in mind, it's on the 195-minute. Daily, I'm kind of expecting this to form a compound 3 up, taking these guys out, reaching new all-time highs. But that's just what I'm thinking, and you can't get too attached to your bias. You just got to let markets open and see where they go. But one other thing I've noticed a lot of time with broadening formations is these outside candles tend to, you can draw a line kind of up these outside candles up the broadening formation, and my outside candles are this kind of aqua color. What I also like to do is see how there's another outside candle, I'll grab a parallel line in the event that price wants to move higher here. And if I were to draw the bottom of this, I like to draw it off of 3 candles, and this is a 3 up on my chart. So on one hand, that could certainly leave some room to go to the downside, but we'll have to see. Remember, my bias tends to be if we pre-market, it doesn't really matter opening wise, it's pre-market right before the open. If there's quite a bit of range and the indexes are near the top of that range, the first general pick tends to be down, and vice versa. If indexes there's a decent range and we tend to be at the bottom of that range near the open, the first directional pick tends to be up. So I'm always patient and kind of aware of that before I just go willy-nilly and jump into some trade. There was one thing I wanted to share too. about the pre-market, I think. Hold on a second. I'm going to turn the pre-market on. And, oh, wait, hold on. Let me get back to the right area. I saw this forming. It was kind of interesting. But the dreaded H formation, pre-market. So M's and H's on the chart tend to be, why is this? This is not my trading view charts. This is my other charting system. It's hard to see right here. Okay, but see how, I don't know if this has a freehand drawing tool on it. I don't think so. Anyway, you see how this looks like an H? So that wick tried to grab liquidity above that level. That's an indication. And then we have a lower high right here. Didn't get above that pre-market. So normally I would think being at the bottom of this range, it's going to bounce. It did eventually here. I mean, that wasn't like some massive sell-off or anything, but seeing this, how it looks like an H, I expected it to come down. And one thing I think traders forget to do is, you know, you're looking at this little screen and you forget to scroll back when you're watching levels. See how it came and tested that level from the other day? I mean, it's almost uncanny, you know, how these things work. And this is only a minute time frame, but I just wanted to show you that was a really clear looking H. I mean, it looks like the letter. All right, on to bigger and better things. What chart did I have here? I think it was FedEx. So we'll start with Home Depot. And I drew broadening formations here. And this is on the weekly. Hold on a second, I gotta fix my... this isn't as easy to manipulate as... I wish I could combine TC2000 and TradingView. I really do. Okay. So here's the weekly chart. This isn't perfect, but here's my three, okay? So when I draw broadening formations, I try to draw them in such a way that it seems reasonable. In other words, if I put a line up here going straight up, I mean, can price get there? Yeah, but it's not likely to anytime soon, meaning if I change the angle on this to be at the top of this three, right, that's kind of off the chain. So I start out with the three if I can find one, and then I'll often grab the make a duplicate line, and here there's another three, so I'm expanding my range in case price wants to go there. But to me on the weekly, the trigger would be right here above this wick at roughly 331. And then initial targets would be right here at 336 on the weekly. But I'd be kind of expecting a ride back up to, you know, this all-time high type of area. And so right now, I just have kind of like a stop thing on here. This is too far away, you know, for an entry to put your stop all the way down here. That's why getting in off the bottom, because then you can keep your stop so tight, is ideal. So I would likely go down to the 195 minute and wait for a break on that level and put my stop maybe just below that. It's hard to tell exactly because I need to see the chart forming, but needless to say, I'm not going to put it, I could even put it below this candle, like right in this area, but I need to see how the charts open up. I'm not going to put it all the way back down here. That's too far away, right? So entry trigger right around 331 for a ride back up to 345. And if you're trading options on something like this, always better to give yourself more time. So I would buy likely 30 to 45 days out. Tesla, let's see what she wants to look like. Let me get it on the right time frame. I'm trying to think how I drew this out. I think I drew this out on the 4 hour, yeah. So this is kind of a wonky broadening formation. Did I draw this? Bear with me just 1 second. I think I drew this off the weekly, yeah. So this is kind of the top of 1-3 candle to the bottom of the other. Again, reason being, if I draw it way up here, that's just a little crazy. And weekly, we're sitting, you know, right at a level to break out to 765. There's not really a great weekly trigger from the standpoint that a 2-2 is a much riskier type of trade. But on the daily, that would be a 2-2 reversal back up. On the 195, really a 2-2 reversal too. I mean, just barely cleared this previous candle, right? So here's my broadening formation on the 195. Initial target's right here at 740, but ultimately I'd be looking for it to bust back out and hit up here. So depending on what kind of trader you are and your tolerance, you know, on these larger time frames, just showing you some possibilities. If you look at the weekly, certainly there's room to keep moving up, right? Weekly target up here at 763. So, or again on the 195, which is like the 4 hour, maybe you have a smaller target right here at 738.60. It's not a lot, you know, of room for Tesla by any means, but okay. And then FedEx, this is on the list because I think they have earnings, yeah, the 21st. And so the options are dirt stinking cheap. Now, don't just go buy options because they're cheap, but if we're getting that run up in earnings, there's a possibility. Looking on the monthly, really it looks like it may want to continue back down. Weekly, you could draw broadening formation right here on these threes, and it could be at the bottom. We don't know. We're going to have to see how price action opens up, and this is why multiple time frame analysis is so critical. On the daily, that same broadening, look at that, I mean, really does look like, hey, price action slowed down. And I want to show you something about candle formation. So when you see these big down candles, see how this one's a huge, long, you know, engulfing body, and see how the magnitude on each candle's gotten so much smaller? Indicates to me that possibly price action's slowing down and maybe has bottomed out. We'll have to see. And then we look here, and this 263.64, I need to see it kind of stay above that level for a possible ride back up. And this is based off this hammer wick right here. And then my trigger would be at 268.72. And that is based on the weekly time frame. Let me make this bigger. And then this would effectively be like a rev strat setup almost on the weekly, and magnitude looking left, I mean, you know, ideally is up here. FedEx is not that big a mover though. So that's not likely to happen before earnings. So really you're looking at maybe this 272-ish, unless things really get cooking. But I just like it for a run up into earnings. It's been selling off for an awfully long time. You would think it's overdue for some type of bounce just from a revision to the mean type of setup. But here's what I was talking about earlier. See all these outside candles? I mean, you can almost draw a line, broadening formation on these outside candles, and then it connects with that all the way down, which I've observed both on the up and down. So you can see it right here too. So the only reason I don't have it drawn right here is, you know, if I'm looking at price action right now, do I really think it's going to zip up to here tomorrow? Probably not. But when this move's going on, that's one thing you can do is just observe these outside candles and draw your broadening formation on the upside and the downside off those outside candles. And look at that, it eventually did a little wick above and failed. And that's incredibly common. These wicks is a test to run stops before it fails in your direction. So just keep that in mind when you start to understand market structure. Just like here at the bottom of this range, it's very, very common when price is getting ready to reverse, you get a bunch of stops being run. Look at that, stopping out a bunch of people before it takes off and goes in the original direction. So let me get rid of some of this chaos. And by the way, if your candles look a little different than mine, this is, I use TradingView a lot, but I just reset up some of my charts on TC2000 too. So TC2000's candles close, I believe, at the top of the hour, so they're going to be slightly different, but you get the point. Okay, so MRNA. I really like this based partly on XLV. At the beginning of the month, I'm always, you know, as far as longs go, I'm always looking for things that are showing some signs of relative strength. And so we're above the close from last month right here. And then we're just ever so slightly above those highs. So that could be, I'm not much of a breakout trader type of person, but we also have this outside candle on the week, which could be expanding the range for a move higher. So XLV, MRNA, and UNH are part of XLV. I like UNH's chart as well, but MRNA, you know, we talk about charts retesting levels here. And let me, here's my daily broadening, okay? And let me just see, I drew my target here off the weekly chart, triggered at 416, back up to 444. Price usually comes back up and retests levels, right? So this broadening formation may need to be expanded, but that's how I drew it for now. Let me just look at the 195 minute. And again, look at, we've got these outside candles. Boom. Amazon. Amazon, we got this big old dip down. Certainly looks to me like it wants to keep moving higher on the daily. Looking for a 2-2 reversal above 342867 with an initial target of 352570, and then eventually to fill that gap basically up to 366 78. And then coin. Bitcoin's been running. I had posted that Bitcoin chart. I'm still in Bitcoin from, I don't know, however long ago it was, from end of July, beginning of August. And there are some market structure things that suggest it could go as high as 100,000 by the end of the year. We'll see. That would be an awfully massive move. But coin is kind of a sympathy play to Bitcoin. This is the weekly target. Again, it already 2-2 reversal. That's more of a continuation play. But given the strength of Bitcoin, I really like it. And let me just see on the 195 minute. You could do something like this where your entry is at 279.28. Really, it should likely, hold on 1 second, I'm just getting confused as to how I do this. That should be a little bit higher than the wick of this guy. And then you could have a stop right below this candle at 277.65 off the 195 minute, because coin's very volatile. I wouldn't want to stop all the way down here where my chart's telling me that's way too broad. But here's my broadening formation drawn off the 3. You can see it bounced around. It started that leg up. And likely with the strength of Bitcoin, could really get going here. And I may need to expand that broadening formation. I just do that by duplicating the line. This one's, it's not letting me do it for some reason, but it should let me just duplicate the line. I don't know, it's not working. But anyway, I'll often click duplicate and then drag it out. I don't know why it won't. It's like I'm not clicking right on it or something. It's really aggravating. Anyway, that is coin. I hope this helps, guys, and have an awesome week.